Good evening, everyone. Welcome back to the channel. So, there's a lot of topics I'd really love to get into here, but unfortunately, they don't all get views on this channel. Um, so, whether by accident or on purpose, which really it wasn't on purpose, I'm majority dividend channel by viewership. I would say, based on my analytics, I'm probably 80% dividends, maybe 20% options, and then 20% credit cards, personal finance, and everything else in general. So, um, for better or for worse, I'm majority dividend channel. So if I want to get views, that's what I got to discuss, which is fine. I mean, like I'm a fan of dividends, and there's a lot of really cool ones out there, and plenty of channels on YouTube also. Like I see competitor analytics. Like there's a lot of really cool dividend channels out there. I never imagined there were so many. But what I want to discuss this evening is SVOL, which I've talked about before, and I've had commenters that have mentioned it also and requested further opinions and analysis on it. So let me start the screen share, and then we will go into that. There were a couple other ideas I had in the works, and of course, as soon as I say that here I am again, for a daily video or two daily videos, doesn't quite always work that way. But a lot of stuff going on. Just graduated from my master's program today, so that was a huge milestone. And so I haven't uploaded since Monday, since the last podcast episode. Hope you all like the title of the podcast. More to come on that. I'm working on lining up more guests and stuff like that. Um, for whatever reason, it's awfully difficult to get fellow YouTubers that want to actually come on and do a collaboration. I don't know, maybe because I'm not a big channel. But anyway, those are all just side notes there. But again, tonight's topic is the SVOL, Simplify Volatility Premium ETF, currently trading at $21.96. And as Yahoo Finance shows here, it currently is paying a 16.92 dividend distribution. And had a live viewer and they disappeared. That's a bummer. I figured I was talking about one of the fan favorites. But anyway, so yeah, 16.92%, negative 7.18% year-to-date total daily return, which is not bad given what the market's done. And unfortunately, the market looks like it's in free fall again, which is a bummer. I didn't quite think that the bottom had happened yet, but unfortunately, it looks like we're still not there. So, that's kind of a bummer. Shall we cue up one of our favorite sound effects? That's at least for the last couple of days. It's been a bloodbath. And it's a real bummer because I did a video on an earnings play on Oracle last week, and it actually worked out. Oracle was up to $84 a share. Looked like there was a lot of insider activity, to be honest, because it was very briefly up to $84, and I had to get out of that position. Like I had to really be watching the market at 9:30 in the morning because there was like a 20-minute window to get out of that position. Otherwise, it would have turned into a losing position like that. So, and I don't think I said so on the video I did, but I actually got into a leap option and I got into a shorter term option. The leap option I figured was probably the safer bet. I stayed in that one, and unfortunately now I'm down in that one. But the other one, I did a January 13th expiring one, and that was the one I was able to cash out for. It was only like a $20 gain. It was kind of not even worth it in a way because most people probably don't realize, but the brokerage firms, when they eliminated trading fees, that was just for general stock trading. They still charge fees for options trading and stuff like that. So, when you do a trade and you're only making like $20, gross of fees, that's still, it's a lot of effort put in and fees paid for a little tiny gain. But anyway, you'd rather gain than lose. But I still have the leap option. So it might take a leap of faith to think that it might recover. But anyway, back to SVOL. So I like this one. I like the yield on it, and it's not down as much as the overall market. Since December of last year, our last golden year for the bull market, we're only down like less than $5 per share. So that's a good thing. This fund has been around probably since it's relatively new, May 2021, and it's really only lost $5 a share. So overall, that's pretty good. And expense ratio is a little high, 0.66%. We like to see it a little bit lower than that. Volume traded seems a bit high comparatively. There's net asset value, other stuff we kind of don't really get into or care about. Um, Now it's up 4% in the after hours, so it looks like Monday it's going to bounce a little bit. And let's look at what company actually issues this. Here's a fund summary. In pursuing its investment objective, the fund primarily purchases or sells futures contracts. So this kind of follows the same covered call strategy, but this one actually works with futures contracts, which I'm not sure if the other ones do or not. But it does futures contracts in part, call options, and put options on the VIX. So this is a volatility fund, hence the name, the V and VOL, SVOL. Get it? Volatility, simplify volatility. Sometimes they cleverly name funds, but not always. Not all financial people are marketing geniuses, myself included. Up to 20% of the fund's net assets will be subject to the fund's option overlay to mitigate against extreme volatility. Half the audience probably doesn't know what that means, so we'll skip over that. Net assets 113.14 million. And yes, Simplify Volatility Premium ETF. I didn't memorize that, but that's what simplifying volatility. Okay, so let's go to historical data. And how often does it pay a dividend? We'll go back a year. Pays monthly, 32 cents per month, and it's been the same since April. It's fallen a little bit. Now let's go to the maximum. So the maximum is only going to have a few more months because December was a year ago, and yeah, so September of last year was the first dividend distribution that the fund made. So 25.6%, 34.9, 39.1 was the highest yield that it paid. So you can see there, basically for the last probably 15 months or so, it's paid, a decent share distribution for what the fund value is. I'm going to add them up real quick here, and let's come up with like a trailing 12-month return. Again, 39.1 is the highest. 366. I'm on April now. 0.326. Just bear with me here. 0.32. The rest of them are easy. So that's May, June, or no? Oh, did it skip? It skipped June. Let's see. Okay, so September, October, November, December, January, February, March, April, May, June, July, August. Or that's September. So let's see here. Divided by 12. Let's see. Trailing 12 month is close to, I think, $3.64 on 21.96. So that's close to what it says, 16.57%. Now, what you've got to remember is that there's two major things that influence a dividend payout. So dividend payouts can be misleading because when the value of the underlying fund drops, what happens to the dividend payout percentage? Well, and they kind of teach you this in fifth or sixth grade, percentages, right? The way percentages work, when the fund value, or the number you're taking, when it drops, the number you're dividing by, which you get the percentage from, the percentage is going to increase because the number at the top, or the numerator, is staying the same, and then the number at the bottom, that you're getting the percentage from, drops. So, for example, this $3.64. When the fund was $26, it was a 14% payout, right? But this $3.64, now that the fund's like $22 roughly, it's closer to 17%, and we round up. So little quick math lesson there that I know you didn't tune in for, but you got it anyway. I want to look at, okay, there's no options on it. It's always weird when like a fund that's like trading options, that they have options on the optionable fund, but that's not the case here. But really, that's a really decent payout monthly if you had this nugget in you, if this was a small percentage of your portfolio. Of course, again, it's 7.18% drop relative to what the market's done this year. Is not too bad overall, and I would think the more the VIX fluctuates, obviously, the more this fund is gonna maybe help mitigate that. But let's see, what else did I want to say here? Oh, growth of $10,000 or loss in this point. If you had got in, let's see, if you had got in, what was the bottom? So if you bought like a couple months ago, oh, October 10th, the day I started my new job. How cool is that? So we'll pick that date. So if you got in for like $20.74, you would have about 482 shares. You're making about 32 cents a share per month. That's $154 per month times 12. That's almost $2,000 a year. So that could pay a bill. I mean, that could pay an electric bill. That could pay like a gas bill. That could pay, I mean, that's $150. That could be, a major bill per month. So that's kind of cool having that coming in to, cover a bill, cover an expense stream. I saw something on another channel that was interesting. Like they have enough of a dividend fund, like JEPQ, I think, to pay their mortgage. That's really cool. So if you can get something like, if you're wanting to live off of dividends, like if you get dividends to pay certain expenses and you get to the point where your dividend income equals your expenses, then the rest of the money you make elsewhere is icing on the cake, right? So that's always kind of cool. But anyway, that's pretty much what I wanted to say about that. And yeah, so I'm over 10 minutes. So I'm going to go ahead and end it there. Thanks for tuning in for the one live viewer that I have. If you like that, please remember to like, comment, and subscribe if you haven't already. And keep an eye out. I am going to try to get back to daily uploads, even though the holidays are coming up. And hope everyone has a great weekend and take care.